This could be the golden nugget of business opportunities for large institutions, for Blackrock, for institutional money managers, for banks. And they are getting ready to make billions of dollars off of us. They are going to make so much freaking money. It's nuts. There's no question in my mind why so many big institutions are getting ready for this. And they're announcing it all the time. So many different banks, so many financial institutions, so many large money managers are getting ready for this. This is something that a lot of people don't understand. They see Jamie Dimon come out negative against crypto, and they just think they hates crypto. That's not what's happening at all. Let me tell you, if you don't mind, stay through to the end of the video. I really do appreciate that. We've actually been growing really fast on the channel recently. People are loving the content. So if you want to see future videos just like this one, hit subscribe underneath the video. Turn on that bell notification so you know right when I post future videos. Also, I just posted like a full video to the Patreon. I've been doing that daily. This was a 10-minute video. So if you want to get in on those videos just an extra video I produce, you can check out the Patreon. I also give all my longs and my shorts, which I don't really short, all my longs, all my new buys in the Patreon. So check that out. And there are also links down there to Margex, which is a cryptocurrency platform that I use to trade crypto in the short term. You can see I just opened up a couple new positions here, actually doing pretty well. I just opened them, but they're a little bit lower leverage. They're a little bit more risk averse. Just in case we go back down to 40K, I won't get wicked out. These are about 10x leverage. This is a really good platform, so you can use different collaterals to trade different assets. Like I could use USDT or XRP or even like Pepe to trade Bitcoin, and I can get my rewards in those other cryptocurrencies, or I could just do Bitcoin to Bitcoin as well. There's no KYC, there's no VPN needed. There's also a link down there to Blofin as well. Blofin now has over 270 trading pairs, and they use Fireblocks, the industry leading assets custodial institution, making them one of the safest centralized exchanges for users' assets. We're also running a campaign right now through Blofin where all you have to do is hit accept when you hit that link underneath the video, and you can get some futures bonuses too when you make deposits. So definitely check out that link underneath the video. I've been talking about crypto for the last few years. I think this is one of the most bullish times for cryptocurrency, and maybe part of that is because we are aligned with big institutions. I've talked about how BlackRock's actually been buying or pushing clients to buy hundreds of millions of dollars of Bitcoin. If you haven't seen that video, I just made it a few days ago. A lot of people think that they're just starting. The fact is they've had people buying Bitcoin for over a year now. And while they are going to take advantage of some of the capital appreciation, they probably have a position in crypto as well. They own some crypto related stocks along with Fidelity, Vanguard. They own some crypto. But where the big money maker is for them is custodial services. Ooh, that sounds super boring, right? But it's not. It's not. Recently, Jamie Dimon came out really negatively. He said the only true use case is for criminals, drug traffickers, money launderers, tax avoidance. And the fact is, since 2000, regulators have fined banks 7,400 plus times, totaling fines of 380 billion. So the fact is they are the ones that are criminals, drug traffickers, money launderers, tax avoidance. Jamie Dimon himself and I believe JP Morgan Chase just settled on like 290 million or something like that, if I'm remembering right, a settlement to Epstein victims, which is nuts. I mean, this guy is one of the biggest criminals in the world, in my opinion. It's just insane. Now, is he saying this because he really hates Bitcoin? Maybe that's part of it, but recently JP Morgan said if you are making a payment related to cryptocurrency assets, we'll decline it. If you'd like to invest in crypto assets, you can try using a different bank or provider instead, but please be cautious as you may not be able to get the money back if it's related to fraud or scam. Now, I'm sure part of that is because they've actually had people that have made fraudulent payments or scams and tried to reverse it, and it's too late. Part of it is just that they're probably setting the way for their own services. Like right now, they say that they wouldn't allow you to invest in crypto assets if you're making a payment. Now, they'll probably just come out and say eventually, hey, it's too risky to allow you to take your assets off platform or off of JP Morgan, but we'll allow you to invest through our cryptocurrency services because we can guarantee it's safe, right? They're basically just forcing you to stay in the system. And they want you to invest with them. They want you to pile more money in. And it makes sense. There's a reason for this. The reason for this is because they can make boatloads of cash. There are so many other banks that are doing this too. Germany's fourth largest bank, Commerzbank, granted Bitcoin in custody license. HSBC plans custody services. Standard Chartered backed Zodia custody joins Ripple global storage network. Coinbase is dominating a key Bitcoin ETF service. There are so many banks. Every single day, a new bank is coming out, getting a crypto custody license, right? Why do you think this is? Why do you think that they're buying, or why do you think that they are getting all these licenses? It's because this is going to be a massive moneymaker for them. It's, pardon this is going to offend some people. This is like the wet dream for institutions. Why is that? Well, one big way that these institutions make money is through financial advisors. Makes sense. There are so many financial advising companies out there. They also have ETFs and funds and stuff like that. Depending on the size of your investment, financial advisors typically charge a rate of about 1% AUM. So if you have $1 million, they'll charge you $10,000 a year, which is nuts to think about, but people pay that fee regularly. They don't want to deal with all the different tax implications. They don't want to deal with trying to figure out what they're going to invest in. Now, the thing about this is financial advisors only can work with so many clients. Like there's kind of a limit. The goal is to get really wealthy clients. So that way you can get, let's say, $50,000 a year instead of $5,000 a year doing the same work. Now, crypto custody services is kind of the best case scenario for institutions when you think about it, because you're coming to them a lot of the time. Maybe they'll do some advertising and stuff, but you come to them, you say, hey, I have 5 Bitcoin, or I have $500,000 I want to invest in Bitcoin. Can you hold it for me? They say, sure. There's no part of that scenario where they have to do a lot of work. Like they have to take some risk, making sure they buy the crypto and that they custody it correctly. But they also give disclosures like, hey, you could lose this, essentially. But then they get paid 1%. There's no regular checkups. There's no worrying about asset allocation, right? Someone is probably going out of their way to put that in their plan. Now, of course, maybe financial advisors are going to say, hey, you should put some allocation towards crypto. But this is just a money-making machine for them. And people are going to come to them, people that don't want to custody it themselves. The other side is they'll also have ETF options, which also are going to be big money makers. The average fee for ETFs currently is around 0.54%, but ARK's proposed fee is 0.8% for their Bitcoin spot ETF. They're the only ones that have come out with it. But basically, these companies are going to make billions of dollars from this. And as they continue to get more and more inflows, the price of crypto is going to go up. So someone buys $1 million at 40,000, and then 5 years from now it goes up to 400,000. They're going to make the same AUM, which is going to be 10 times that amount. So they're going to, again, make, instead of AUM on $1 million, 1% fee is $10,000. $10 million is going to be the new AUM for that person, and they're going to charge $100,000. And not no one, but a lot of people aren't going to feel comfortable taking that out and holding it themselves. If they put money in at 1 million, they're definitely not going to feel comfortable taking out at 10 million, doing transactions or transfers for $10 million, knowing if they mistype something that they are going to lose their crypto forever. So they're probably going to park it longer than they've ever stayed with financial advisors. That's the other part of it. This is going to be very sticky. Of course, you could say, hey, this new institution's charging a little bit less of a fee. Maybe I'll transfer it over there. But even that, like, people are going to be more cautious about transferring crypto from one institution to another. The people that hold your crypto are going to say, hey, you can do that, but there is a risk, right? You could lose your crypto if it's sent to the wrong address or something. So people are going to stay there. Like, it's going to be stickier than I think even portfolios are, honestly, once you get used to it. And I've made a video why BlackRock wants you to buy a lot of Bitcoin. If you haven't seen that video, I go over how much money they could actually make. And this is just one scenario, but I break down the numbers showing you the profits that they can make from their AUM I'm going to leave it blacked out here, but you can go watch that video if you want. The numbers are insane. Like, people really don't get what's happening here. Jamie doesn't hate crypto. Maybe he does, but that's not the big point. They are paving the way to have their own custody. Same with every other financial institution out there. They want AUM and they are willing to do just about anything to get it. And this is really the best case scenario. Like I said, lower effort, huge upside. Like I said, very sticky. People, companies, custody services are going to salivate when they start seeing these numbers come in. Let me know your thoughts. I have another video, maybe it's coming out before this, maybe it's coming out after this, talking about how there are millions of new investors that are going to come into crypto, and it's because it's going to cash flow. If you haven't seen that video, be on the lookout for it or check for it. If I have it, I'll put it on the end screen here if I've already posted it. Otherwise, it's just going to be kind of gray until I post that video. But let me know your thoughts. Thank you so much. I appreciate it. I'll see you in the next video. Again, check out Margex and Blofin underneath the video.